Okay, thanks everybody for joining us. My name is, of course, PJ Miklas. I'm the head of investor relations here at Royalty Exchange, and I'm accompanied by Matt Smith, our CEO. And the purpose of the video today is to walk you through the order book, how it works. It's, of course, only available to all access investors right now, and it's become one of the easiest and most scalable way to invest in music royalties. And we'll show you how you can participate.
Yeah, so let's give you a little context on what the order book is and why it is what it is. If you've been on the platform for any period of time on Royalty Exchange, you see that most of the transactions that occur are auctions. And an auction is a great thing. I mean, an auction is a great way to facilitate transactions, especially of esoteric products like music royalties. The price is a great price discovery mechanism. It's transparent and you can have lots of people participate. So it's great in that way. And yet there's a lot of friction involved with this. Let's say if you have, for instance, a reasonably large pool of capital that you're interested in allocating toward music royalties, it could take you might have to participate in dozens and dozens of auctions in order to acquire enough of the asset class to basically meet the allocation that you want to have. Can be very time consuming with lots of small decisions needed to be made. And for really large capital allocators, I mean, it's nearly impossible to really do this over any period of time, since there's only one winner in each auction, which means on average there are 6 or 7 losers in every auction. So it's difficult to acquire assets that way. On the seller side, though, this friction is even more pronounced. See, for a seller, if you can put yourself in their shoes for a moment, this is this is their life's work. Sometimes people have a deep emotional attachments to it. Sometimes they don't. But it's something that it's important to them. It's probably their most valuable asset. And at this point, it's very difficult for them to even know what it's actually worth. And for them to learn what it's worth, they have to go through the auction process. And so from when the first point we talk to them to when the auction actually closes and they finally learn what their asset's actually worth, often 6 or 8 weeks have transpired. There's a lot of effort and a lot of uncertainty that sellers have to endure and what often frankly feels like a lot of risk to them in order just to get to that price discovery point. So that's where Orderbook comes in. It substantially reduces friction on both the buy side and the sell side. And we're going to go through in detail exactly how both participants, how this looks from the seller side and how it looks from the investor side. And we'll get into exactly how you can participate. All right, so how does Orderbook work for investors? Well, the key concept that we're working with to make Orderbook work for investors is that we're dealing with this idea of signal versus noise. And what I mean by that is that more information is better, basically all the time. The more information you have around a catalog, the better investment choices you can make. And in auctions in particular, there's an enormous amount of information. And as long as you have a good, maybe through experience, maybe you have a good filtering mechanism as to which information you should weigh in what way, like how much weight should you give to the fact that a catalog had 3 Grammy nominations, or how much weight should you give to the fact that it is the catalog has a 6-year dollar age, and how does that factor into the fact that the featured artist on some of the tracks in the catalog is somebody that you know well and are a fan of, and how does that drive your investment decisions? So I think all that information is all good. However, it's very difficult for people to broadly make and to weigh each of those factors properly. So what we try and do with Orderbook is we've tried to narrow down the categories of focus to things that we are certain that have universal utility from a signal standpoint. And we because the fact is that all of these qualitative factors like Grammy nominations or featured artist or genre preferences, for instance, while those factors in the totality might mean something, if you boil down universally, those things don't necessarily mean anything. Whereas there are some quantifiable factors that do universally apply. And PJ, you can talk about some of those factors that we use.
Sure, yeah. As our auction platform, we have, by principle, just included all the information that we possibly could to be as transparent as possible. And I think that, as Matt mentioned, that's created quite a bit of noise for investors to see what is valuable and what is not. Now, there are four main metrics that we have found to be extremely valuable and reliable in valuing catalog. And those are the four main metrics that we use to restrict catalogs that are included in the order book on our side. So the first one is dollar age, of course. You're familiar with our feelings on dollar age. It's basically a measurement of the quality and sustainability of the earnings of a catalog. Another category or metric that we go into in one of our recent All Access Insights pieces is the adjusted trend rate. Basically, what we do is we normalize the income stream, take out the spikes, and look at the growth rate of the income stream, and we restrict catalogs being included in the order book to ones that have a neutral or better adjusted trend rate. We, of course, look for consistency of earnings in terms of dollar amount. We want to have at least a $1,000 revenue in the last 12 months. And then, of course, we've talked about the difference between production and commercial music. So we do our best to restrict production music that does not have commercial appeal in the order book. All four of those metrics together, in addition to the parameters that you put in when placing your order, of course, have matched a lot of investors with some really great catalogs.
Yeah, and I think one of the things is that these are these criteria are actually binary metrics. So these are basically the catalog must meet a certain standard to be eligible for inclusion in the order book. And the reason for that is that the risk profile of the assets, of all assets that fall below these standards, changes dramatically. The dollar age is a great example. So when a new album is released, there's if it's released with any kind of success at all, there's a spike in earnings, and that earnings curve reaches a peak after something like 6 quarters, and then it starts a pretty serious decline, and that decline curve sort of levels out after that 3-year mark. And because of that, the nature of it, where you're entering in the particular income curve, for new music, while it could still be very good to own some of those things at certain times, I mean, it ultimately I think comes down to a price, how much you pay for those, knowing that they're at peak earnings and going to decline until they plateau out. They could be good, but it's hard to standardize the assets unless you apply these sort of binary metrics that on one side are a set of assets that are going to be significant. They're going to have a different risk profile than assets that are on the other side of that.
I think all the, in terms of what we actually include in the order book versus all the deals that we look at, I believe it's only a fraction. I think it's something like 20 or 25% are actually that pass our parameters and our restrictions to actually be included in the order book to look at those orders that are live standing orders within the book.
I will say, the order book is still in beta, and we do expect that over time that investors who are interested in accessing catalogs that might still be in that early period of earnings, for instance, that they would be able to do that. But in its beta form, we want to basically draw a clear line of where risk is more difficult to assess, and if a catalog falls on that side of it, then it's excluded. If it doesn't fall if it falls within those parameters, then it comes down to how investor specifically orders and how then that gets matched up with the catalog. Okay, so let's talk about actually placing an order. PJ, what are the criteria, or what are the levers that folks have to pull when they place an actual order?
Yeah, it's very simple. Basically, you place your min fill and max fill when placing an order. That is to say, the smallest asset that you can be filled with within your standing order in the order book, the maximum fill, the largest dollar amount that you're willing to be transacted within the order book. Of course, the price at which you're willing to be transacted, that is a metric of the last 12 months multiple. So basically you put in the max LTM multiple that you're willing to pay. And then of course, dollar age, the minimum dollar age catalog that you'd be happy being transacted at.
Yeah, and as PJ mentioned earlier with dollar age, that we really think that this is, when you boil everything down, dollar age is one of the most useful tools you have, useful signals you have as to the quality of the earnings of the catalog. And so it's the interplay of the price that you're willing to pay for the certain level of quality of income stream. It's the interplay between those two things that really are the essence of an order. And dollar age, the way we think about it, again, it's not something a quant would use as a fundamental tool for understanding all things to know about a set of songs in a catalog, but where it is useful is as a heuristic, and it relies on something made popular by Nassim Taleb called the Lindy Law. And the Lindy Law states that something is likely to be around in the future as long as it's been around in the past. So if something's been around, if a catalog has been, in popular culture, where there's been demand for it and people are listening to this music for 10 years, the odds are it's going to be around for another 10. Of course, it's not a pure science, but it does seem to hold true. And as just a sort of a mental exercise, when you think through one of a number of great catalogs we've had the opportunity to work with, and one of my favorites is the Dire Straits catalog.
Yeah, perfect example.
And that catalog dollar age is around 30 years old, and it is, the band has been disbanded for a long time, and yet the catalog is still earning, and in fact the earnings are growing stronger each year. And a lot of that, of course, is driven by the boom in streaming. But still, this music from a band that's no longer together, whose work is 30 years old, is only improving. And the odds that it's going to be around for another 10 years are incredibly high. Another 20 years, very, very high. And another 30 years, likely. And that's the kind of catalog you really want to own, and you're willing to set your multiple for it at a much higher level than you would, the price you're willing to pay versus something that is 3 years old. Now, there's an important thing that we got to state here about the assets that go through Orderbook, and we're going to repeat this later because I think it's so important, and that is that everything currently transacted in the Orderbook it's catalogs that are based upon a 10-year term transaction, which basically means you're not buying it for the life of the rights. You're buying that income stream for a period of 10 years, after which that income stream reverts back to the artist. So knowing that it has that lifespan, that should inform how much you're willing to pay in terms of a multiple. And when you combine that with the dollar age, like how old the catalog is, then you come up with the right formula to effectively meet your needs.
I would just add that 10-year term advances have become the most popular type of asset to transact on our platform at Royalty Exchange after we introduced them just a little bit over a year ago, as of this recording, which is May 21st, 2019. And the order book is all about standardization. It's all about basically taking assets that with these metrics and these parameters by which we're restricting and by which you're placing your orders can be the transactions are much more standardized. So the fact that we're just using assets from ASCAP and BMI helps with that standardization. The fact that we're just using term advances for right now at the 10-year level certainly helps with that standardization. Now we're working on advancing the order book to where we can include life of rights, maybe different ages of term advances, 20, 30-year term advances, other distributors, but right now it's restricted to just that.
Yeah, and the standardization is really important because ultimately, if one of the great challenges within the marketplace currently is the effective deployment of capital and the huge number of decisions that anybody who wants to deploy any reasonable amount of capital to these assets has to make in order to accumulate them through auctions, if you add in the variability of how long will each track within a catalog be earning based upon its current copyright standing, the truth is a life of rights deal can be less than 10 years.
Yeah, of course.
It can be. It depends on how much time is left in the copyright. So the 10-year term is a nice standardization tool that makes it so that investors can more effectively make decisions. Of course, people would naturally bid less on a 10-year term than would life of rights, and that's just factored in. The 10-year term versus life of rights is all a matter of price. So in any case, it's an important thing to consider, and we're going to get into next a couple of other things that investors really need to consider when placing orders in the order book that we think help with risk mitigation, understanding the risks that are there, and making sure that they end up with the assets that they really want. All right, so let's talk about risk mitigation. And there definitely are a different set of risks associated with participating in the order book as opposed to participating in an auction. In particular, when you place an order in the order book and it gets matched up with a catalog, and the seller of that catalog accepts the order, it is a binding transaction at that point. There is an expectation on our part and on the seller's part that you would, that you would follow through on that transaction, that the order gets filled. And what that means, though, is that the seller has had a chance to fully review your offer, but you haven't had a chance to fully review their catalog. And it's basically the exact opposite of the situation that exists within an auction, where the seller, you get full chance to review over a number of days, if you like, all the details that we have around the catalog, and then the price comes later, the bidding comes after you've had a chance. So, and the reason for that is because the greatest source of friction with expanding the marketplace and bringing more great assets into the hands of investors is the friction on the artist side, making it easy for them to understand what their assets are worth. And by focusing on the signal versus noise, we feel like that there's a good trade-off there for investors. But you got to understand that you're not going to have a chance to scrutinize the catalog before you place your order. And after the order is filled, you're not going to have a chance to then scrutinize the catalog either. Of course, you get all the details in the catalog after the order is filled.
So it's important to just place your LTM multiple, or the price at which you're willing to buy a catalog, within parameters that you'll feel comfortable within certain dollar ranges transacting without being able to scrutinize the catalog.
Yeah, exactly. And so let me just explain this this is just personal perspective. This is just my personal perspective based upon my risk tolerance and my overall portfolio and the way that I view investing in these assets. And that is that there's a certain price where things are a no-brainer. So based upon this binary measure of order book eligibility, where everything has to be over 3-year dollar age, a neutral or growing adjusted trend, that a certain level of earnings, etc., production music excluded. Based upon that criteria, I'm willing to buy as much of anything I can, sight unseen, for a price of 2.5 times the LTM. And this is, to me, using the Lindy effect again. The Lindy law is that everything I'm buying is at least 3 years old. There's going to be a lot of things that are going to be well older than 3, and so anything that's at least 3, paying a 2.5 multiple for, knowing I only get it for 10 years, to me is a no-brainer. It's hard to imagine how on scale I lose. So that's me. Now, as you step it up the quality of earning spectrum,
Dollar age, yeah.
through dollar age, then the bid price would go up and the order would go up. So in my case, for instance, something that has a 5-year dollar age, for me, again, it's riskless to me. It feels this way to me, to pay a 3.75 multiple for it. 3.75. To me, I don't see how it wouldn't work out on scale with enough diversified assets in there over a 10-year term. And you can continue that further, get up to something that has an 8-year dollar age or greater. A 4 multiple, again, feels like a no-brainer to me, based upon my understanding of the assets and my overall portfolio and my risk tolerance. So I think that it's important for you, key thing in risk mitigation with this is knowing that you're not going to be able to scrutinize a catalog. Don't place your bid on the optimal scenario. Place your orders on the scenario at which you would be happy to own it regardless. And what you find is that, because you're placing your maximum multiple, your maximum price essentially, and your minimum dollar age, you often are surprised to the upside by getting catalogs that are they're always going to be at or above, of course, this dollar age parameter. Sometimes they're substantially above. I've definitely had catalogs that I've acquired through the Orderbook where I had a minimum dollar age of 8 and got a catalog that was 17. So there are, those things make a big difference, and they help over time if you're accumulating a catalog.
And one major benefit of the order book is, of course, that if you place your minimum fill low enough, you could be matched with a number of different catalogs that could create quite a diversified basket of holdings and assets that you own. Of course, you're not being charged any transaction fees on these order book, on these matches. So you should be happy to be able to be matched with a number of different catalogs under one order. I would also say that, to Matt's point before, it may make sense to have a couple of different orders in the order book at different dollar ages with different multiples associated with them.
I think it's really critical to do that because there's a great risk otherwise. Because if you just have the minimum saying, I'll pay a 3 multiple for anything that's over a 3-year dollar age, then you're never going to get any of the catalogs that have been around a lot longer. I mean, you're just not going to be competitive for those. And if you just have, though, an order at the higher end of the spectrum saying that I'm willing to pay, whatever, let's say a 4.5 or 5 multiple for catalogs that are greater than 8-year dollar age, you're going to be missing out on plenty of great catalogs that would diversify your overall portfolio and can generate tremendous yield. So I think that I think it makes sense personally to have a few orders in there, but of course you have to look at it for yourself and decide what makes sense for you. So the other thing I think that there's a placing orders if you apply to participate in the pilot program for Orderbook and you have questions about how to place orders, we're here to help you with that
Yeah, of
and
course.
can walk you through that process.
And there's also, we're quite familiar with how the order book works and, are familiar with the orders that are in there at a given time. If you need help looking for an opportunity, see like, hey, like at this dollar age, what is my best chance of being filled in the near term versus, having to wait for a while, I can help direct with that. Happy to help really in any way that I can and that we can on our side in terms of actually placing the orders.
Yeah, and when you look in the order book, we try and model the same sort of open approach that we use in our auctions. So if you go and look at that page, you'll be able to see all of the open orders as they exist. You won't be able to see who they're associated with, but you'll be able to see all the open orders that are there. And you can, if you look at it, you'll be able to see there's some areas usually of kind of arbitrage where people are sort of missing out. If you just increased your bid a little bit, you'd be able to have access to a whole range of dollar age.
And to that point, it's important to keep an eye on it because new orders are placed every day, and an order that had priority yesterday may not have the same priority tomorrow. It's an evolving and it's a fluid way to transact on these assets. So it's important to kind of keep an eye on it and see where your order stands versus the others.
Yeah. So hopefully this was all helpful for you. If you have any questions, please email us or call us. We'd be happy to answer any questions you have about Orderbook or really, frankly, anything else that's in the business. And we're extremely excited about what's happened with Orderbook so far. We've shown millions of dollars in offers to sellers. We've had more than $1 million of accepted offers from sellers, and that's growing every day. And by the time you see this, odds are these numbers will be totally irrelevant because we'll be so far beyond them. But it's showing quite a bit of promise, and it's getting a lot of traction among the artist community, who is finally learning for the first time that their assets have real value and that they can, have access to the capital behind that value at any time. And so we're working very hard on improving this by adding new features, new asset classes, types, from new distributors and things like that, life of rights, etc. But right now, today, there are great opportunities for investors in Orderbook, and we encourage you, if this seems like this is for you, to go ahead and just fill out this quick, short application that there will be a link for on this page, and apply, talk to PJ, and we can get you rolling.
Thanks for joining us.
Thank you very much.